I think this probably isn't over, in my opinion, the market indigestion. I think part of what is being discounted now is the potential for the Fed making a policy error. Having said that,
and you think the policy error is increasing?
Is that they go too quickly. Having said that, the chances of the U.S. going into recession, in my opinion, in the next year or two are exceedingly low. The economy is in excellent shape. The Fed is far from tight. It's that, we essentially have a new Fed chairman, and we have to figure out how that works. We're using something in around the 1570 range 2570 range, 2575 range as kind of the bottom of the range for the S&P 500. But frankly, I look at this as an opportunity to buy cyclical stocks.
Cyclicals, but you're not buying tech, for example.
I would buy tech. I wouldn't buy communications. So I'm of the view, we have a different view than most of the street in that we think we're more towards the middle of the cycle than the end. I don't think, and I think the Fed largely distorted a normal business cycle.
Yeah, but why do you say far from tight? How do you know we're far from tight? What if we went to where Powell said we're going to get to what still wouldn't be neutral? That wouldn't be tight, given where inflation is and given where
inflation, right? So we're far from tight, just to the extent to which the real Fed funds rate is zero. So let's just say 2.25 is the Fed funds rate. Inflation's about 2.2. So it's not tight.
What the heck's the market thinking then?
Well,
the market almost looked like it was almost saying you're right, Mr. President. It almost it's kind of weird.
I think my own opinion is
stock market almost said.
I don't know if I would have expressed it this way, but I think the president has a point here that the pace
markets seem to listen.
Well, then maybe he shouldn't be putting tariffs on the economy at the same time, because there are two things slowing the economy. One is the Fed, and one is the tariffs. And if we are doing the tariffs right now because we're in a great position
you can say
because the economy is strong,
it's a chicken and egg.
No, but
it's a chicken and egg. Maybe we should. Maybe the Fed shouldn't be raising.
If we're in a position to be doing this.
If we're going to do something to China ever, maybe this is not the time to be raising, since now we're going to do the tariffs.
That would suggest it's a coordinated effort.
Depends on which way you
coordinate with the Fed, and the Fed doesn't coordinate.
But I would
argue
that the trade situation looks far better than it did 6 months ago. I think one of the things that happened.
An end in sight for China?
Well, no, because what has happened within the White House is they decided not to have a trade war with the entire planet at the entire
time. Getting to a deal that we reached with NAFTA.
Now we're getting down to China, which
However, I think China it looks like a much worse situation.
Well, if you
I think we thought that was a negotiation, and I think that now that you look at it, people are thinking this is more like a.
But if you thought now's the time to do it because we're flush with the economy, if we're ever going to do it with China, now's the time to do it.
With the economy, why are we upset about the Fed raising rates?
Because we decided to do the tariffs now to beat China.
Paul has been patiently waiting. Are we winning, Paul? It's a cliche of a question, but we've been talking about what inning we're in here. Weigh in.
I think of the recovery. I'll push back a little bit on Jason. I do think I've been saying this for 6 months. I think recession begins sometime between Q3 of 19 and Q3 of 20. And if you want some substantiation already, you can certainly see it in auto loans and delinquencies. I mean, the housing market is clearly under tremendous pressure. I understand tax reform perhaps caused part of it, but to me, a lot of things are lining up for a more consumer-driven recession. And regarding the bull market, I've been an unabashed bull forever. I was on with you guys a couple of weeks ago calling for this mid to upper single-digit decline in stocks. I think most of the price damage has been done. I think we're going to thrash around for another week to 10 days, 2 weeks as we get through the election. I don't know how, if the Fed raises rates in a normal cycle, if there even is one anymore, how is that raising rates quarterly too quick for the market? I have subscribed the market is. It's not the Fed raising rates that really is spooking the market. There are other factors, and I think we're using the Fed as cover. The Fed is going to cause this recession. I've said it for 6 days, 6 weeks, 6 months, 6 years.